All righty, folks, we have to have that talk about that man. Yes, Jerome Powell and the Fed. They are going to give us our open market committee decision on Wednesday. We're going to get a press release, and we're going to have Jerome Powell in front of the microphone. We're going to talk to Taylor from Life Goal Investments about this because I think Wednesday could be market moving for all the wrong reasons. But we're going to talk to Taylor about that. How you doing, buddy?
I'm doing great. It is a big week. It is a big week. On top of earnings, we have the Fed coming out here. And the next 2 days, they'll be discussing, and we'll see what the language that comes out of the Fed's press conference is, which I think is more important than what we get at the actual rate decision. And I know
Uh,
that we've gone back and forth a little bit, but the rate decision seems to be a foregone conclusion. I don't know if you're thinking they're still going to buck that trend or not, but I can discuss a little bit on that if you want.
no, absolutely. The other thing to talk about this meeting is particularly important because again, they take off August. They do their yearly Jackson Hole retreat. So
Correct.
again, I think this meeting is extra important because Powell knows he has to buy 12 weeks of
Right.
time versus the normal 6 weeks. So what do we talk about what the market believes is coming? To answer your question, I'm not going to change this late in the game. I'm going to stay with a pause, even though I'm now on an island of 4% or something like that. Uh,
Less.
yeah, it's less than full. Great. All right, but I'll go down with the ship. I'll wear the swing and a miss shirt. I don't mind. So why don't you tell us the odds for the Wednesday?
Yeah, the odds are 99.8%. And
Dude,
so
I'm
you're with 2
standing
people
on
out of
one leg.
you're 2 people out of 1,000 that are betting that we are gonna get a move it. But listen,
Uh,
I don't fault you for that. I don't necessarily say that, "Hey, this move is needed," but this move is coming, right? So,
yeah, I think
th
that is exactly right. It's
that
not
is the
needed.
reality
It
of
is
it.
coming, and it is a mistake, in my opinion.
Okay, and I don't necessarily disagree with you. I do think there's some things that have popped their heads up recently that have been a little bit disconcerting. So if the Fed weren't to go, right, likely the dollar would rally on that news. The dollar would appreciate. Yeah, I'm sorry. The other way around. The dollar would sell off on that news. So the dollar would sell off, and what that does is inflate commodity prices.
Mm.
And so what we have right now is a commodity index that was up 2.1% just this past week. And granted, short time frame, but what we have is oil moving back up. You have corn moving back up. You have wheat moving back up, and some of that has to go do with what's going on with Russia and Ukraine overseas. But nonetheless, the commodity index is showing some reflationary trends right now. And so, if the Fed were not to go, the presumed assumption is that they're going to move higher. If they were not to go, likely you would have that dollar soften and you would have that commodity price surge on the other side because that's at least the historic trend. And with that, obviously, input costs start to get changed, and then inflationary pressures follow there.
Yeah, and let's also be very clear. If they did not raise this week, the stock market would race ahead.
Yeah, so this is an interesting one because I was thinking about this in my head, and the only thing I could analogy I could put out there is like if they didn't go, it would be like your boss coming to you and saying, "Hey, take next week off." And you're
Exactly.
like, "Oh, that's awesome." But like at the same time, what the hell's going on here? Why are
Yeah.
you
Do
giving
you
why are
know?
you giving me this week off? um, so yeah, I do. Yes, I do think that if they weren't to go, which they are going to do, you would get a rally in the stock market, but you would get massive head scratching going on
Yeah.
because they've articulated so vehemently that they are going to move. But
Yeah.
again, I think that's this meeting. I think what's more important, and to your point, is what they say about what's coming up in the future. And
Yeah.
that's where the market and that's where the market is saying different things than what the Fed is saying. So the Fed has said
Yeah.
likely we get one more,
Yeah.
and the market is saying no more rate hikes are coming this year.
Yeah. I think on Wednesday for the folks watching, I think there are three things that happen. One, we get a rate decision. Again, they're going. So that's a nothing burger. And for the folks that are watching mortgage rates, it's already priced in. If you
Yep,
got 99.8%, it's priced in. Wednesday
correct.
will do nothing. Two, we're going to get a press release. And what I have, in my opinion, this is always my opinion, I've combed over the press release for the last, I think it was 6 or 7 Fed meetings. To me, those are a collection of the 8 Fed presidents kind of middle of the road. And then we get Jerome Powell in the microphone. And what near as I can tell, my opinion again is Jerome Powell, when he's at the mic, it's his opinion. He doesn't take into account the other 17 folks. It's his opinion. And I think that's where he rocks the market on Wednesday.
And I think you're right. Remember, I think it was 2 meetings ago, they were talking about recession, and Jerome
Yeah.
said, The
Nope.
conventional wisdom by the Fed group as a whole is that recession's coming. My opinion is that we can avoid recession.
Yes.
And he drew a very distinct line in the sand there and said that I don't think what the rest of the Fed governors, Fed presidents are saying right now. So it will be interesting. And so I'll ask you this. Do you think we get the dovish raise? Essentially, do you think that's what's most likely?
So certainly that's my hope. I actually think because kind of in the setup I talked about, they take August off. He's
Right.
going to do a hawkish raise because he knows he has 12 weeks to back that off and data. And you're going to get 2 inflation readings. You're going to get 2 PCEs. You're going to get 2 PPIs. You're going to get whatever it is, 12 weeks of weekly unemployment data.
Yep.
So he has no downside for a hawkish raise because he
Yep.
can say I'm data dependent on all this other freaking nonsense. My fear is Wednesday is a hawkish raise that the market's not ready for. I think the market expects a dovish raise. And I think Powell is pissed off the Dow's up 11 days in a row.
I was gonna ask you that next.
Yeah, I think he's mad. I think he's like, damn, how can the Nasdaq and the S&P be this close to record highs? How come this? How come that? So I if you use kind of a dove and a hawk, I think he could come out as hawkish as last August Jackson Hole, the 8-minute speech where he basically said, I'm going to come out and kick you all in the nuts. You're not paying attention. I think it could be that hawkish.
Yep. And then you are, to your point there, if he makes that hawkish kind of move here, so he increases interest rates and then he says, by the way, more are coming, or says something that you read between
Oh,
the
no,
lines
more
and
is coming.
understand that.
Not just one more. More are coming. Yes.
Yep. And then he always has the ability, if data softens in Jackson Hole, to walk that back. But I said this in a video I did an IG Live the other day, and I said what they try to do at the Fed is they try to set their stance out there and pull the market in their direction so there's no surprise at the next time when they do whatever it is that they intend to do at the next meeting.
Yeah, so I think Wednesday Jerome Powell could break the market. I really do. Break the market meaning, because again, I think it goes off at 11:30 Pacific, 2:30
Correct.
Eastern,
Correct.
Which is during the trading day. I think the market might be up in the morning and then have a great. I don't know, but I mean, just my concern is again the market is set up for a dovish raise, and I don't think Jerome Powell wants any part of a dovish raise.
Right. Yeah, and it'll be interesting. Historically, what we've seen with Powell's pressers is that the market trades off on Powell's pressers. So we'll see if that trend continues. Yeah, it has been pretty darn consistent too. And the magnitude of that move has been differed by which one you look at. But in general, when he's spoken, the market has traded off. And part of that is because the market has consistently gone into all of these meetings saying they're not going to raise that much. They're not going to raise that much. And the Fed consistently says, we're sticking with the plan that we said we were going to deliver, and that has been higher rates. So that's what's been, causing consternation in the market every time he's on the microphone.
Yeah. So if we look at this again, something the Fed could do, and I talked about it today on the daily financial news, is they could just keep pushing. They give us one in July. They give us one in September. They give us one in December. The Fed could take a track as we're going to go until something breaks. Is it banking? Is it the economy? Is it unemployment? Who knows? But one thing they could do is just go to something breaks because then they know how to fix that, right? Oh, whack rates 100 basis points. We're okay. Do you think Powell wants to do that?
I think there's a chance, and this is so far in the rearview mirror right now that it is past anyone's thought process. I think there's a chance we continue to see issues play out in the regional banks, and I think that the issues are going to come with, conversion of banks, banks coming together. Wow, I didn't use my words. Yeah. Banks being bought by other banks. Yeah. Consolidation was the word I was looking for, and I think that it'll be viewed as. We'll see how the market views it, but consolidation within banks is because one bank is struggling mightily and has to be taken out by the other bank. But I think that those options are absolutely on the table. And if the Fed continues to move rates higher, guess what? Those options get realer and realer along the way.
Yeah. So at the end of the day, obviously you see one more rate hike at least. Do you see them doing one more before the end of the year? One or more?
I do. I've learned my lesson here. I'm not saying that it's the right thing to do. I think that they're probably good where they're at right now, but I've learned my lesson fighting the Fed. And that's not in the traditional sense of like if the
Yeah.
Fed's raising, stay out of the stock market, but like fighting what the Fed says they're going to do has
Right.
been what they've done. So I got to take lesson learned there. Fool me once, shame on you. Fool me
Yeah.
twice, shame on me. Like there's been
Right.
shame on me because I was consistently in the camp they're not going to go as much as they have, but I've been wrong.
Yeah. One of the things that I'm putting out there, because I always like to measure myself, right? I'm calling this Fed rate hike a mistake. And how are you going to be able to measure it? It's a mistake, in my opinion, is if they're forced to cut within 9 months. That's if they cut in 9 months, this rate was a mistake. Because again, I think they could be good here, probably for 18 months. But I think this, it's always that one extra that breaks things.
I think you're right. And historically, and I've said this on the show before, but historically, after they stop, it's 8 to 9 months until they cut. And so historically they go too far, right? That's what that tells us. And so, you would think they would learn their lesson at some point, but again, the fear is that we still sit at a core inflationary number that's at that 4.8% mark, which is far away from 2%.
Yeah. Do me a favor, Taylor. Where can people find you? Because you put out amazing daily content.
Yeah, thanks so much for that, Michael. Follow us at Life Goal Investments. We're on both Instagram and on TikTok.
Thank you, buddy.